ETH rolls over, Peter, we'll see unified flow.
That's a prediction. Right now Ethereum's Delta 2 trade ratio is tighter than Bitcoin's, fewer but larger buy orders holding the line. If Bitcoin truly had that much conviction, we'd see Ethereum capitulate already.
Fair point. We'll watch the next print sequence. If that 1.3 million trade was distribution, not absorption, I'll have been wrong. That's the test. The dollar index is up just over 5 points at 99.83, and the 10-year yield has backed off, down 15 basis points to 4.684. That's the weather system. A stronger dollar and lower yields pull in opposite directions. The dollar starves emerging markets and makes commodities harder to finance. Lower yields should lift risk. But Peter, we're seeing gold climb $8.50 to $44.49. That's not risk-on behavior.
It's not. Gold's moving because real yields are compressing faster than nominal ones are falling. The VIX is down to 15.28, which doesn't match a flight to safety. Are you reading this as a technical pause in dollar strength or something deeper?
The dollar's only fractionally higher. That's a holding pattern, not conviction. What concerns me is the yield move. 15 basis points down usually means something broke. Where's the stress showing up that we're not seeing yet?
Brent crude up nearly 1% to 89.68 suggests energy's holding. If there were real credit stress, oil would have rolled over. So either the dollar stall is precautionary, or we're in a local consolidation before yields find new direction.
Consolidation is the honest read here. Nothing has broken. But consolidation doesn't last. The dollar and the 10-year will resolve, and when they do, risk will move sharply in whichever direction they're genuinely pointing. We're not there yet. Bitcoin's realized volatility sits at 22% over the last 25 candles. That's your actual price movement. But the market is pricing in only 1.6% range for the next few hours. There's a compression building.
Peter here, that gap between realized and implied tells us options are pricing stability, but XRP is a different animal entirely. 42% realized against a 3% expected range. That's the widest disconnect we're seeing across the board.
You're right that XRP is the outlier, but I'd push back on calling it stability. Ethereum sits at nearly 30% realized with only 1.6% implied. The market is consistently underpricing what these assets are actually delivering. When that gap closes, it closes violently.
Fair point, but which way? If realized vol stays elevated and implied catches up, we see premium decay. If price calms down instead, we get a squeeze. Which are you positioning for?
The data says elevated volatility persists. Until we see realized drop below 20, I'm not betting on calm. Single Bitcoin sell order just moved $284,000 at 63,670. That's 4,462 times the average print size. It hit the market less than 90 seconds ago and was not absorbed, leaving the buyer holding the position. Open interest tells us who's in the trade and whether they're committed. Bitcoin's fallen 0.5% on the contracts, down to 59,200. That's liquidation, not accumulation. Ethereum barely moved, down 0.01%. But Solana added almost 1 million contracts. That's new money stepping in.
Patrick, Solana's up under 1% on price though. If you're adding that much open interest on a flat move, where's the conviction? Bitcoin and Ethereum are both shedding positions while price is held. That reads like exits, not squeezes.
You're right to push back, Peter. That's the distinction we need to see. Dogecoin shed 250,000 contracts as well. The broad picture is liquidation on strength. When price holds but open interest falls, shorts are covering into bids they don't trust.
Fair point. But Solana's move upward on rising open interest is different from your other two. That one's genuine fresh capital. The question is whether it sustains beyond the next 13 candles.
That's the trade we're watching. New money in Solana against liquidation elsewhere. The market's choosing its conviction carefully right now. Long traders are paying shorts across 9 of 10 major tokens. BNB, Link, and XRP lead the charge at nearly 11% annualized. Cardano and Bitcoin follow at just under 10%. Avalanche is the lone exception, shorts paying longs there, but at a mere 6.5%. The market consensus is clear, conviction is running long, and leverage is expensive to maintain. Bitcoin's cumulative volume delta has turned decisively negative. We're looking at nearly $19 million in sell-side absorption over this session. That's a sustained bearish posture. But here's what matters. Ethereum sits at minus 90,000. Solana, XRP, BNB, the altcoins are not following. Bitcoin's selling pressure isn't contagious right now.
The delta spread tells part of it, Patrick, but Ethereum's 4,400 trades against Bitcoin's 4,200 suggests institutional participation is actually heavier in alts. Why would smart money stay with Bitcoin if the flow pattern is this lopsided?
That's a fair question. The largest single Bitcoin print was $1.4 million on the buy side at 63,600. That's absorption, not conviction. Meanwhile, Ethereum's largest print sits under 300,000. Smaller, distributed. Alts are being accumulated methodically.
But Bitcoin's down 0.07% on the session while most alts are flat or higher. That's not divergence yet, that's just noise around the hold line.
Not noise, Peter, it's the shape of what comes next. When selling pressure fails to drag the entire complex down, the weak hands reveal themselves. Bitcoin sellers are working alone. That matters. $19 million Bitcoin sell block just crossed at 63,623. 12,000 times the typical trade size. The print absorbed immediately, but cumulative selling pressure has now reached nearly $20 million underwater. Solana is trading down from 76.19, targeting 75.46. The invalidation level sits at 76.65. Order flow is running 77% to the sell side, and open interest just climbed 1%. That's fresh shorts entering, not old longs being squeezed out. The real tell, 71% of accounts are still long. That's the flush waiting to happen. 31 minutes on the clock. Chainlink leads the session up 3.25% to $8.69. Avalanche is the day's biggest loser, down nearly 4% as it tests 610 support. Bitcoin holding above 63,600 despite a 0.5% decline, while Ethereum edges higher at 1,885 and Dogecoin gains 2% on modest volatility across the board. Cleveland Fed President Hammack says it will take more than one rate hike to bring inflation down. The market's pricing in cuts by year-end, but Hammack is signaling the Fed sees persistent price pressure that won't bend to a single move. That's a significant gap between what traders expect and what the policymakers are telling us.
Patrick, the real tension here is in the front end of the curve. 2-year yields have already priced in easing, but Amex pushing back hard. Are you seeing the tape respect that pushback, or are we still in denial about the inflation regime?
We're still in denial, Peter. The equity market's sliding on oil strength and Nvidia weakness, but it's not behaving like a market that believes rates stay higher for longer. There's a disconnect. Oil's climbing and that should scare people more than it does right now.
Bitcoin's the tell though. ETF inflows are offsetting selling pressure, which means institutional money still believes in the narrative. If inflation data surprises hot, those inflows dry up fast.
That's exactly right. Bitcoin's caught between two forces, institutional conviction versus macro reality. When that breaks, it breaks hard. Bitcoin's largest print this session was nearly $500,000 on the buy side at 63,604. That's over 7,000 times the typical trade size. It absorbed, which means the institutional interest showed up and held.
Patrick, that buy absorbed, but the cumulative volume delta for Bitcoin is still deep underwater at nearly 19 million to the sell side. Doesn't that absorption look more like a dead cat bounce than conviction?
You're reading the same delta I am, Peter. That's exactly why the absorption matters. Someone with serious capital stepped in at a level where sellers had already dominated. That's not conviction yet. That's a test of support. We'll know in the next 2 hours whether it sticks.
Fair enough. But Bitcoin's still down slightly on the day. If that $500,000 buy was institutional conviction, why haven't we seen follow through into higher prices?
Because conviction and price movement aren't the same thing, Peter. Order flow leads price. We're watching the mechanics before the market tells us the direction. That's the trade. Bitcoin absorbed a $918,000 buy print at 63,580 just 42 seconds ago. That's more than 14,000 times the typical trade size. Sell-side pressure persists with cumulative volume delta now nearly $18 million negative. The dollar index is nudging higher while the 10-year yield pulls back. That's a mixed signal, but it keeps real rates supported and caps the upside for risk assets. The Nasdaq is down 0.6%, the VIX is calm, and gold is modestly higher. Brent crude is up nearly 1%. For crypto, a stronger dollar and sticky yields remain the headwind, even as volatility stays subdued. Ethereum and Solana have both drawn heavy long positioning. 80% of retail money on Solana is betting up. That's the crowded trade right now. XRP sits even more extreme, nearly 80% long. When positioning tilts this far in one direction, price moves tend to punish the majority.
But Peter, Bitcoin's different. Your long-short split sits at 59.40, almost balanced. Are you seeing that as genuine stability or just calm before repositioning?
Stability. Bitcoin's skew is under 10%. Ethereum and Binance Coin are both skewed 17% toward longs. That separation matters.
XRP's skew is 30%. If those retail longs are wrong on direction, the unwind could be severe. What's your read on whether price confirms that positioning or breaks it?
Price breaks it. It always does when it's this crowded. I'd watch the exits. Bitcoin and Ethereum are both contracting at their open interest. Bitcoin down 1%, Ethereum down a hair above zero. That's the squeeze setup we watch for. Price holding while money exits. It tells you the move we've seen is running on fewer hands, not fresh capital.
Solana breaks that pattern entirely. Open interest up 2.2% while price climbed. That's new money arriving, Patrick. Not a squeeze. Where do you see the danger in that divergence?
Solana is the outlier here, Peter, and that matters. When one contract rallies on fresh positioning while the others compress, you're seeing rotation, not conviction across the board. The weight is still in Bitcoin and Ethereum.
Dogecoin's open interest dropped 0.4% on 13 points of movement. Minor, but it shows even the retail favorites aren't attracting new leverage right now.
Exactly. The tape is thinning. We're squeezing, not building. Bitcoin's biggest single trade this session hit $954,000 on the buy side at $63,600. That print arrived about 4 minutes ago and it was not absorbed. The trade was nearly 7.5 times the typical Bitcoin print size. Cleveland Fed's hammock says one rate hike won't bring inflation down. That matters because the tape's been pricing in cuts by autumn. Markets are now facing a longer, higher for longer regime. Equity technicals are rolling over on that signal.
But Patrick, crude's already moved $10 higher this week. How much of today's equity slip is oil, and how much is actually the Fed recalibration?
That's the mechanical question. Oil's lifted everything with a dollar correlation. The equity weakness we're seeing in Nvidia and the broad indices is layered. Some crude, some real rate repricing.
Bitcoin's in a standoff right now. ETF inflows are meeting selling pressure almost exactly. If inflation data this week triggers directional conviction, which way does the tape lean, in your view?
Peter, that data point becomes the hinge. If prints stay hot, we hold higher yields and dollar strength. Bitcoin breaks lower on that. If inflation softens even slightly, the short covering could be sharp. Bitcoin's largest print this session is a $250,000 buy at 63,617. It's sitting unabsorbed. That tells you something about market structure right now. Size meeting resistance rather than liquidity.
But Peter, the sell side print just below it is $240,000. When you have competing prints of that magnitude within a few dollars, what does that say about where the real conviction is?
You're right to push back. The delta favors buyers by over $1,260,000. That's 15% to the buy side across 3,919 trades. But unabsorbed print means neither side could clear it yet.
The cumulative volume delta is negative $16 million though. That's the longer view working against the intraday bullish print you're highlighting. Which time frame matters more here?
Both. The large print is noise if the curve keeps degrading. We watch the next print size inside. That tells us whether conviction is holding. Solana is sitting at 76.19 with order flow 77% on the sell side. That's new positioning, not forced liquidation, because open interest climbed a full percent. The setup breaks if we touch 76.65.
You're running two positions on the same asset with different invalidation levels. Why not consolidate? And what makes the 94% sell side order flow on your second entry more reliable than the first?
Peter, the 94 print came in 36 minutes ago. The 77 was 19 minutes old by then. Fresh conviction matters. But you're right to push back. I've seen order flow spike without follow through.
71% of accounts are still long. That's your cushion. But if this unwinds, it moves fast.
It does. We'll know in 19 minutes whether the tape holds the level or admits the trade was wrong. Chainlink is your biggest mover today, up 3% to 869. That's meaningful in a market where most names are treading water. The move came on actual volume, not noise. It suggests real conviction behind the bid.
But Patrick, Chainlink's turnover is 54 million. Compare that to Dogecoin at 99 million on the same 3% gain. Why should we treat one as signal and the other as secondary?
Fair challenge, Peter. You're right on the raw turnover. But Dogecoin's move is meme-driven retail chasing. Chainlink broke resistance on institutional mechanics. Different animals.
Then why hasn't Chainlink closed above its 24-hour high of 882? It's still 3 cents away.
Patience. The structure is there. I'm not wrong yet. Bitcoin's cumulative volume delta has turned decisively negative. Nearly $20 million of sell pressure has accumulated over this session. The largest single print hit 150,000 on the sell side at 63,614. That kind of size, Peter, tells us the smart money is distributing.
but Ethereum's delta is half that severity, only 716,000 negative across 2,300 trades. Bitcoin's absorbed that selling. Why would institutions dump Bitcoin while Ethereum holds relatively steadier?
Ethereum trades with less friction. Smaller average trade size, tighter spreads. But look at the flow composition. Bitcoin bears are making a statement. The CVT series shows us the pressure has been relentless for the last hour.
The ratio matters. Bitcoin sell to buy is 2.421. Ethereum sits at 1.821. That's a meaningful difference in conviction. If alts were following Bitcoin's weakness, we'd see that reflected in the ratio.
You're right. The divergence is real. Bitcoin's breaking down alone. That separation is precisely what we watch for. Realized volatility across the majors tells us something important. Bitcoin's running at 22%, but Ethereum's already at 30%. Solana's pushed to 33%. XRP is the outlier at 42% realized. That's nearly double Bitcoin's move.
Peter here, those realized figures matter, but the range Bitcoin's trading is only 1.6% per candle. XRP's running 3%. Why the gap between what's happened and what's priced for the next few hours?
That's the tension, exactly. Implied volume hasn't caught up to realized in the smaller caps yet. When it does, range widens. XRP will lead that move upward. 13-minute-old buy print just hit the tape in Bitcoin. $875,000 at 63,640. That's nearly 7,000 times the typical trade size. The market absorbed it completely. Longs are paying shorts across 9 of the 10 major tokens right now. BNB, Link and XRP are the crowded trade, all running an annualized funding rate of near 11%. That's real money leaving long positions every 8 hours. Bitcoin and Ethereum are lighter at under 9%, but the directional signal is unmistakable. We're seeing sustained bullish positioning.
Patrick, those annualized rates assume flat spot prices, which they won't be. What I'm watching is avalanche. Shorts are collecting here at -6% annualized. That's the only contrarian print in the set. Are longs overextended enough that this reverses, or is avalanche just fundamentally weaker than the cohort?
You're right to isolate that divergence, Peter, but here's what troubles me more. The mean funding across all 10 sits at 0.6% daily. That's 60% annualized on a blended basis. Retail money doesn't understand what that tax costs them. That's crowding, plain and simple.
The math is right, but the crowding question cuts differently. If funding stays elevated, longs keep paying. If it collapses, you've got capitulation. Which scenario are you positioned for in the next settlement?
Settlement comes in 73 minutes. I'm holding short exposure. Elevated funding that thick doesn't persist without consequence. The equity sell-off is modest, S&P 500 down 1/3%, but the Nasdaq has taken nearly double that hit. Gold is up $8.50 to 44.49, the dollar index climbing past 99.80, and the 10-year yield has backed off slightly to 4.684. What matters is the VIX sitting at 15.28. That's calm. That's not a fear signal.
Except the futures are showing different conviction. S&P futures are up 8.5 points. Nasdaq futures up 83. So spot equities are selling while the next session is pricing a bounce. Which one is the real signal?
Peter, that's a fair question. Futures often front-run the close. But when you have a stronger dollar and Brent crude up nearly 1%, you're not in a risk-off environment. The narrative here is selectivity, not panic.
Agreed on environment. But gold holding gains while rates fall and the dollar rises, that's unusual. Typically those move inversely to gold. What's driving the bid?
That's the question that matters. Gold is telling us something the other assets aren't saying yet. I'm watching that divergence closely tomorrow. Bitcoin's largest print this session came in as a buy, $875,000 at 63,640. That's 3,439 times the typical trade size. The print absorbed cleanly. Buy flow is outpacing sell flow by $290,000, a delta of nearly 6%. But cumulative volume delta sits deeply negative at $20 million of net selling pressure, suggesting the buying at these levels is meeting significant overhead resistance. The cash market has closed. S&P futures are up 8.5 points at 77.56. The Nasdaq futures are the real story here, up 83 points, nearly 0.3%. That's meaningful upside when the cash Nasdaq fell 0.6. We're seeing a shift.
Peter here. The 10-year yield dropped 15 basis points to 4.684, which is pulling bond proxies higher after hours. But X bounce in futures isn't about bonds, it's mechanical. Where's the volume behind that Nasdaq move?
Fair question. The VIX compressed lower, down 1.18, so fear is leaving the market. That matters more than volume at this hour. The dollar index barely moved, up 4 basis points. Gold is up 850 at 44.49.
Gold's up on yield weakness, I agree with that pattern. But Brent's rallying too, up 70 cents to 89.61. That's not a safe haven move. You're seeing energy demand expectations shift, not just Fed repricing.
You're right. That's not a flight to quality. That's appetite returning for risk assets across the board. The futures are discounting something real. Bitcoin and Ethereum are moving in opposite directions on open interest. Bitcoin's losing contracts, down 0.8%, while Ethereum's adding to the stack, up 0.1%. That split tells us something. Bitcoin's move higher is happening on fewer shoulders. It's a squeeze.
But Solana's doing neither, Patrick. 2.2% gain in open interest on the 13-point price move tells us fresh capital is actually stepping in there, not being run out.
Fair point. Solana's different. The other names, Doge, XRP, BNB, they're all shedding contracts as prices hold. That's capitulation wearing the mask of stability.
Or consolidation. How much of that Solana inflow is retail chasing versus smart money building a real position?
That's the question that matters. We won't know until one of those bids fails. When it does, the open interest will tell us who was really there. Chainlink is your biggest mover today, up 3.7%. That's meaningful in a market where most names are treading water. The range has been tight, 842 to 882, but the conviction is there. Volume is solid at 6.3 million contracts.
Patrick, that's fair, but Dogecoin is up 2.2% on a turnover of $99 million. How much of that move is genuine demand versus retail noise on the lower price point?
Peter, that's the right question. Dogecoin runs on narrative, not fundamentals. Chainlink, by contrast, is an oracle play with real infrastructure demand. When Chainlink moves up on volume like this, institutions are paying attention.
I'll grant you the institutional angle, but Avalanche down 3.6% troubles me more. That's your steepest single-day decline in the set. Are we seeing a rotation out of layer 1 risk?
We're watching it. Avalanche broke below its 24-hour low at 6.107. Until it stabilizes above that, the weakness likely continues. That's the trade. Cleveland Fed's Hammack made a statement worth marking. He's saying it will take more than one rate hike to bring inflation down. That matters because the market has been pricing in a single cut as relief. Hammack is telling us the work ahead is longer.
That's the messaging shift, but the tape is already hedging against multiple holds. Bitcoin's caught in that crossfire. ETF inflows are offsetting selling pressure, but inflation data could break the deadlock either way. Which way do you think that breaks?
Peter, the data will move it. Right now we're in a holding pattern because the Fed itself hasn't moved. Once inflation numbers hit, we'll know whether Hammack's multiple hike scenario is priced in or still a surprise. Oil climbing and equities slipping suggests the tape is nervous about that conversation.
Equities are nervous, sure, but selective. Nvidia's pulling back while the broad indices slip. That's not panic selling across the board. The technician in you, does that differentiation tell you anything about conviction in the broader move down?
It tells me there's selective damage, not systemic rejection. When everything breaks together, we see real capitulation. When the leaders hold ground, the selling has limits. I'm watching to see if that holds through the data. Bitcoin's cumulative volume delta has turned deeply negative. Nearly $19 million more in sell-side contracts than buy-side over this session. That's a decisive technical message that sits at odds with where the altcoins are moving.
But Peter, Ethereum's delta is worse. Down 10% against a 2.4% positive print for Bitcoin. So which one is actually showing weakness here?
That's the divergence worth watching. Bitcoin absorbed that selling and still held. Ethereum didn't. The largest single Bitcoin trade this morning came as a buy. $250,000 at $63,653. Conviction underneath the headline weakness.
Conviction on one trade. Bitcoin's had 2,400 prints today. How much of that 23 million delta comes from Solana, Ripple, the smaller names actually breaking higher?
You're right to push. The concentration matters more than the aggregate. That's where I need to look deeper before I call a bottom. Chainlink leads the gainers at 3.5%, closing near 870. That's conviction. BNB follows, up 2%. Dogecoin rounds out the top three, barely holding positive ground. Volume matters here. Chainlink's move has teeth behind it.
Patrick, Avalanche is your laggard down 3.7% to 624. But here's what concerns me. Polkadot and Cardano are both negative too. Are we seeing structural weakness across smart contract platforms, or is this rotation noise?
Peter, that's the right question. Avalanche's decline is sharper than its peers. That suggests specific selling, not just sector drift. When one contract underperforms its neighbors on the same thesis, the chart is telling you something different happened there.
Fair point. But Cardano's only off 1.7. The spreads aren't wide enough yet to call it systematic weakness.
Agreed. Watch the volume on any bounce. If Chainlink's conviction doesn't migrate to the losers on reversal, we're still in a corrective phase, not a reversal.
Asia opens with crypto mixed but not weak. Bitcoin down less than 0.5%. Ethereum actually up 0.7. The session before closed with Bitcoin losing contracts on open interest. But we're not seeing panic here. Today's calendar is thin on data until the European Open. So watch the technicals.
Natalie, the real story is what's not moving. You've got Avalanche down nearly 4%, Cardano down almost 2, but BNB is up 2% on volume. That's not random. What's driving the divergence between layer 1s today?
That's the question, Aaron. BNB's outperforming its peers despite the same macro headwinds. Could be exchange-driven flows ahead of potential spot ETF developments, or it's just technical support holding. Either way, it matters because it suggests selective strength. The broader basket is soft but not collapsing.
True, but Dogecoin up 2% and XRP up 1.3 positive. Seeing it in at one small coins Zimbabwe will be short. That's not vision, that's rotation.
You're at attack rather than digital. Beautification, station algorithms and mean price action are original. And right now that's a question. Biggest mover today, down nearly 4% in 24 hours. That's a steeper drop than we're seeing across the board, where most names are holding relatively steady. Chainlink and BNB are bucking the trend higher, but the question is whether that's conviction or just rotation out of the larger positions.
Natalie, Avalanche's turnover is only 25 million again.
Fed President Hammack says it will take more than one rate hike to bring inflation down. That matters because markets are pricing in potential cuts later this year, but the Fed's own officials are